Good Tesla news was just confirmed, and investors are definitely excited about this one. Tesla tells staff it plans out to roll out its Robotaxi service in San Francisco this weekend. So Sawyer says Tesla is expanding at a fantastic pace, and I definitely agree with that. For now, Tesla is expanding relatively slowly, but we are all going to be hit with a huge expansion later all at once. And as I'm recording, Tesla investors are definitely liking this news. The stock is up almost 5%. And things are going basically exactly as I predicted. Long-term investors are going to be more bullish, and short-term investors and bears, they're even more bearish now. Kathy Wood here just bought quite a bit of Tesla stock, $45 million worth of Tesla. And Morgan Stanley is now saying that we struggle to think of any other company as well positioned as Tesla in terms of data, robotics, energy, AI, manufacturing, and supporting infrastructure. And then Ives says, we believe the Tesla sell-off is a major buying opportunity as we focus on the autonomous and AI future. Our bull thesis is focused on robotaxi expansion, autonomous, robotics, and the AI future. And you know why Morgan Stanley is struggling to think of any other better company? It's because Tesla, when it comes to all of those things that they listed, Tesla is the #1 company. And Ives further explains we would be buyers on any Tesla weakness. This is an AI story, and the autonomous and robotics future is the future. So therefore, Tesla is the future. Deliveries under near-term pressure, but Musk is driving AI future and autonomous worth $1 trillion to the story. That's our bull thesis and focus for Tesla. To which bears are saying, shut up. They must be really mad that Ives has a Tesla stock price target of $500, and those people that are shorting Tesla stock, they are frustrated and disappointed and just confused. How come Tesla stock was just down almost 10% in one single day, but now it's up? It's supposed to just keep going down indefinitely, always, forever. But it is not going down today, it's up today. And if you look at the comments from the previous video, you will see that there are quite a few people that are upset that I said I am now more bullish in the long term, not in the short term, in the long term. And Keith Fitz-Gerald here said about Tesla and Elon Musk, betting against Mr. Musk is like betting against Steve Jobs back in the day. Calling Tesla a car company now is overrated. History is filled with examples that are not obvious until after the fact, and this is exactly what's happening. I think that's what we are dealing with Tesla, he says. Steve Jobs was absolutely amazing, but I think Elon Musk is just on another level, actually. Now, Keith Fitz-Gerald, he actually believes that Tesla is headed toward a $20 trillion valuation. And Elon commented, extreme execution is needed, but a valuation of $20 trillion for Tesla is actually possible. That would roughly be a 20x from where we are today. So a $6,000 price target for Tesla stock, if you assume that is actually going to happen. And look, Elon believes that that's possible, and I think he's actually going to try to pull it off. And one thing throughout history that has been proven to be a very bad idea to do, generally speaking, in the long term, not in the short term, but in the long term, is to bet against Elon Musk. Now, many analysts said that the earnings from Tesla, it was a bad earnings call, it was a bad earnings day, although at the first glance, Tesla did beat the earnings consensus by a tiny little bit, but then later people are feeling a bit uneasy because some of that beat came from a one-time thing, which was the crypto gains. But Canaccord Genuity actually increased their Tesla stock price target to $333 from $303. Longer term, Tesla has a generational set of growth opportunities ahead, including EVs, autonomy, AI, energy storage, and robotics, which also help justify our premium multiple. We acknowledge the limited upside implied by our price target. However, we believe buy is the appropriate rating given near-term volatility, buttressed by the long-term opportunities beyond the next 12 months. Well, this is quite interesting. An analyst, a company, a firm that actually thinks beyond 12 months. I give a big shout out to George here from Canaccord Genuity. Here's another firm reaffirming the overweight Tesla stock rating of $355. Now, about that planned rollout of supervised robotaxi in San Francisco this weekend, there are some important details. Here's what we know so far. Tesla told some workers it plans to launch its robotaxi service in the Bay Area this weekend. And before, I did report that in this case, Tesla would first put a safety rider or driver in the actual driver seat. And here that is basically confirmed. Robotaxis will have a safety monitor in the driver's seat with full access to the brake and steering wheel. The California DMV said Tesla has not secured a permit for driverless testing. Of course, I await for the day when Tesla is going to remove the safety person completely from the vehicle, and that is definitely coming. But Dylan here says everyone is missing what was by far the most important part of the Tesla call. Tesla's current geofence in Austin is 42 square miles, and Ashok said a 10x is coming. And when that happens, you know how big the area is going to be. It's going to be bigger, longer, and 420 square miles. Elon, this is totally intentional, isn't it? 100% it's intentional. And then there is also a bit more good news right here. I think this is an important exchange for us Tesla stock investors to be aware of. The president said everyone is stating that I will destroy Elon's companies by taking away some, if not all, of the large-scale subsidies he receives from the US government. This is not so. I want Elon and all businesses within our country to thrive. In fact, thrive like never before. The better they do, the better the USA does. And that's good for all of us. We are setting records every day, and I want to keep it that way. To which Elon responded with, the subsidies he's talking about simply do not exist. The president has already removed or put an expiry date on all sustainable energy support while leaving massive oil and gas subsidies untouched. SpaceX won the NASA contracts by doing a better job for less money, moving those contracts to other aerospace companies who would leave astronauts stranded and taxpayers on the hook for twice as much. Well, regardless of that, currently, there's no open hostility from the president, and I think investors also like that. And at first, when it was said that the president is not going to destroy Elon's companies, Elon said this, so basically a sigh of relief. Although I don't think he's really being serious with this. This is more like a comedic comment, I think, from his point of view. But for me, the reason why I like this news is because this basically means that the president is not going to try to reverse the robotaxi regulation. So all the regulations that are being put in place for Tesla to actually be able to launch in all of the US with robotaxis, these are going to stay in place, I believe, and these are not going to be changed. Now, after listening to the Tesla's Q2 earnings call, a few things became clear to Farzad. Tesla's earnings will remain depressed versus previous years for at least another 12 months, perhaps longer. I think that's a very valid point, and that's one reason why the markets did not like that call. Also, remember, there's no more vehicle guidance, nothing. So this means that in the best case scenario, the stock will remain flat to down for that time period unless the market is willing to give the company a higher multiple. I have seen similar statements from other people many times throughout Tesla's history. Tesla stock will remain flat to down for that time period. And then I witnessed the stock go up 50%, 100% in just a matter of a few months. The thing is, currently the market in the short term is already pricing in everything that it knows about Tesla and Tesla stock and Elon Musk. So if everyone thinks that it is going to be flat to down, these people basically would be selling now because there's no risk to sell it and then just buy back later. But everyone who thinks like that already sold, and there are always people that think, no, it is actually going to go up. And sometimes in the short term, they are right. So to me personally, when someone makes a prediction that the stock will remain flat to down for this period of time, I usually don't pay much attention to it. Now, there could be very valid reasons, and I do agree there are certainly valid reasons. But the thing is, the market has already seen these reasons and is aware of these reasons. Farzad continues here, the company is all in on AI and autonomy. All actions are centered around this technology. I absolutely 100% agree with that. Elon and the leadership team sound very confident that they have the right ingredients to dominate in the next stage. of the company with Robotaxi, human robots, and energy. I definitely agree with that. The company is willing to take on debt to fund the next leg of growth through Robotaxi and bots if the company isn't able to generate sufficient cash flow to fund capex. Yep, and I think probably the markets were not a big fan of that during the earnings call. And it's obvious that the stock market is valuing Tesla as an AI company. I do have to start to agree with that now. Absolutely. Those who do not, they sold after the earnings just now. Its current market cap relative to future earnings from the current and planned drivable fleet of vehicles doesn't make sense. The energy side of the business will not grow fast enough to justify this multiple in the next 5 years. Therefore, the market is strictly looking for clues around Robotaxi's rollout, specifically how quickly it can expand, how many people will use it, and how much money it will make per mile. And at some point, it will start to take the bot seriously once Tesla can prove a profitable use case, either through reducing cost of goods sold at the factory and or selling to customers. And here's a way to think about the bot. When could a city like Dubai buy 100,000 bots to keep the city clean and offer services to its visitors like helping carry their bags, groceries, luggage, all on the city's dime? What's the likelihood Tesla could sell these profitably to them? I think Tesla stock's best chance in the next 12 to 18 months to move meaningfully higher is either Robotaxi/bot showing conclusive evidence that the cost per unit of production of both products is significantly profitable. So basically, FSD getting quite a bit better. The demand for both products are absolutely no-brainers. A self-driving car at scale that costs significantly less per mile than a drivable car is relatively easy to model. Same with a humanoid robot that can do physical tasks humans do today, especially those in industries where the cost of labor is relatively high. For example, manufacturing, supply chain, and logistics, dangerous but repetitive job functions, etc. And then pair that with a potentially lower rate environment, and the market could continue to give Tesla a very aggressive multiple well into multi-trillion-dollar market cap, and always Tesla had a high PE. But Tesla has to prove that they have the formula and that they have the scale. The TAM for Robotaxi and bots simply too big to ignore. It's up to the market to decide how much it's willing to price in. So Elon said Robotaxi for half of the US population by the end of this year. Even if Tesla does 10% of the population, it's going to be crazy for Wall Street not to buy into that story. But Farzad says they need to prove it in Austin. Specifically, he means on the P&L, in the earnings. I'm obviously sold on it. Everyone else needs to be. I think this is a somewhat valid criticism from someone that doesn't fully understand how Elon Musk or Tesla operate. And I think it's important for us to keep this in mind. Also, clear is no thousands of bots this year, maybe not even 100, since they are working on an Optimus 3 prototype. It's weird that just 3 months ago, Elon was confident about thousands of bots within a short time frame, and now that's changed. Frustrating. But this is exactly what Elon has done for literally decades. This is how he operates on the fly product iteration. You immediately dump the old when you can do it better new, and you don't worry about the sunk costs. But many other people and most companies, they worry about that. They cannot stand that. And this is how a lot of companies get in trouble trying to make something work. Tesla goes with the thing that makes the most sense regardless of how long it will take. It's more painful, it takes longer, but it will be way better in the end. But then there's a complaint. There was confidence that was troubling, like his confidence with unsupervised FSD always being imminent years ago to date. Well, this is one way that Elon Musk also keeps the stock higher. This is basically free money. I think to a small degree, in some cases, he's somewhat aware of that, but also in many cases, he does have that belief that he is going to make it. But also, he knows that probably he's going to be late, but in the moment he just says it, well, I think we might be able to do it. And I think also what that does is it really pushes the team. So he might actually be saying that largely to just push the team further. When your CEO says that things are going to be delivered so soon and so quickly, it's a bit embarrassing if you cannot help him do that. And so therefore, I think the people around Elon work harder because he's pushing so much. I thought about this. This is actually a very real possibility. Not a guarantee, certainly, but a very real possibility. Yes. Hot take, but in 2026, 2027, hardware 3 will be better than hardware 4 today. Omar says that's a given. The main reason why it wouldn't be, and I'm talking about like the current version of FSD in today's cars that customers can get, not the version that Tesla is running in Austin and Robotaxis. If Tesla worked further on improving hardware 3, I think FSD could get significantly better there still. But I don't think Tesla is actually going to work on making hardware 3 better, because they already decided that we're just not going to do it with hardware 3. We're going to solve full self-driving first, make it safer than human driving. We will then deploy that software to all of our new hardware vehicles, and then we will figure out how to replace the hardware 3 computers. So if Tesla actually tries to spend quite a bit of time on making hardware 3 better and use its precious resources and engineering talent and resources, I will not like that at all. Those who own a Tesla hardware 3 vehicle, sure, that would be pretty good news, but I think it would be a bad business move overall, because it's already promised that Tesla will replace all hardware 3 computers with whatever computer they will have later that will actually deliver unsupervised full self-driving. I think Omar has a pretty, he's onto something here. Tesla should offer a deal for a limited time. For every mile you drive on FSD, and I assume this is if you haven't tried FSD before, or if it's been a while since you tried FSD, you get 1 mile of free supercharging. Use FSD, drive for free. And of course, you can limit how many supercharging miles for free would be given away, but that's certainly a way to do it. Elon commented here, due to laws against data export, Tesla achieved the top results in China despite having no local training data. Tesla is adding training data from our world simulator and test tracks to achieve 6 out of 6. Currently, for example, Tesla's Model 3 is 5 out of 6, and just to be a top performer, you need to get 3 out of 6. You are in the mid tier if you got 2 out of 6. And there are many vehicles that get 0. The Chinese media tested ADAS in various scenarios, including highways and night driving, and Tesla's vision-based system outperformed emerging Chinese brands. Even, pay attention to this, with LiDAR, competitors' ADAS performance lags behind Tesla, even with LiDAR, the technology that's pretty expensive to deploy. Here are some sample tests. So the vehicle is basically launched, and then look at Tesla's. Tesla's stop. But other vehicles, nah, they don't actually stop, and then they crash into the dummy vehicle, basically causing a crash that shouldn't happen. Now, not every single one of them, but some are pretty bad. I mean, wow. And this is something that's even more important for Tesla stock investors to be aware of. XPeng has 2 vehicles tested, and its P7 Plus has vision-only based ADAS. In all 4 tests, couldn't do all 6 tests due to damage. The system failed to pass. So obviously, not all vision-only systems achieve the same capabilities and human-like performance like Tesla does. This is for a few simple reasons. Number 1, Tesla has by far the most data. And number 2, Tesla has the best engineers that work on this specific problem. And also Tesla has been working the longest basically on this specific problem in the way that they are working on it. And another thing that actually helps is that the vehicle form that Tesla has, that vehicle form is out there and it's collecting all of that data. And other companies, when they launch vehicles, okay, they have how many of these vehicles on the roads? 10,000, 20,000, 50,000? Not millions. Tesla's Model Y is the #1 best-selling vehicle in the world, and that exact form factor is then plugged into all of the data, and then Tesla does not need to remake its whole software thing just because it now has a different size vehicle. And if you use, for example, a Model X or a Cybertruck on FSD, you know, there's a significant performance difference between these vehicles, even if these vehicles are on the exact same FSD version. And I think that's because on these other vehicles, Tesla has a lot less data, and the software is primarily built for a vehicle that's like a Model Y or a Model 3. And so this is another thing that I'm thinking about. If Tesla doesn't launch a new, cheaper vehicle that is basically the size of a Cybercab, how is that going to affect its FSD's performance? On the other hand, if Tesla launches a cheaper vehicle that is basically the size of a Cybercab, and therefore the vehicle more or less sort of drives largely like a Cybercab, then Tesla does not need to worry about that at all, because that vehicle would sell like hotcakes, and quickly Tesla would have a lot of data, and they would be able to tune the FSD model specifically for that size and for that vehicle. By the way, interestingly, the reason why the Model Y wasn't included is because it doesn't have FSD. So they were able to use FSD in the Model 3, but not on Model Y. And then Tesla posts this here, piece of cake for our neural nets. This is the Roundabout final boss. This is FSD supervised tackling Swindon Magic Roundabout in the United Kingdom. And FSD is handling all of this. Great. Some of these roundabouts can be a little tricky to navigate, but this one, FSD, in this case, it handles it well. So I'm happy to see that. And my friends in the UK, you guys should probably be getting FSD probably this year. And if not this year, then certainly definitely next year. Either way, it's definitely coming. And I think that will also help Tesla with sales, certainly, at least a little bit, for sure, 100%. Elon believes actually it is going to help the sales quite a bit. I'm not so sure about that, but certainly it will help. And the more proof that FSD is coming to the UK, Tesla just released its first ever video of FSD supervised being tested in London. And this is, of course, good for Tesla. The CEO of NVIDIA said everything that moves will be autonomous. And of course, all cars are going to be autonomous. Now, if Tesla actually pulls off what Elon Musk said Tesla could pull off, meaning the Robotaxi would cover half of the USA's population. These are the top 20 metro areas that Tesla would need to target. And when it comes to this one, even Omar says, I have a hard time believing Robotaxi will launch in all of these markets by the end of the year, but I would love to be wrong. If Tesla puts people in front of the steering wheel in their Robotaxis, I can actually see how Tesla could pull it off. But in terms of what that would do for the stock, I'm not so sure it would be really all that bullish if you would have safety drivers in front of the steering wheel. I think it would accelerate the development of FSD and the launch in these other markets of actual true unsupervised robotaxis. But I think how Elon presented it, people think that it would be basically robotaxis with either a safety person in the vehicle, but on the passenger side, or no one in the car that's affiliated with Tesla.
Can you update us on what we should expect this thing to actually look like?
Oh, we won't get into the looks because
Let's just go Model Y. Yeah. Look the cat out of the bag there.
So when Elon was asked about how is this new, more affordable model going to look, he said it's just a Model Y. So it could be this, and most likely I think it is this one right here. Now, if it's exactly the same as the current Model Y, then there would have been absolutely no need to hide it, but there's something different about it. So if I wanted to maximize sales and I wanted to confuse everyone, I would say that it is a Model Y, even if it means that actually we will call it a totally different model. It's going to be a bit smaller. It's going to be similar to the Model Y, but it's not going to be exactly like a Model Y. It will be different enough that we could call it a different model. If I wanted to do that, I would say it's a Model Y, making everyone think it's just going to be a stripped down Model Y. And if you are buying a Model Y today, okay, that doesn't really change your thinking. I should wait and I don't mind a smaller vehicle as long as I still get all the nice seats and all the nice things that Teslas have. But if I'm thinking it's going to be like cloth seats and it's going to be completely stripped down, personally, I'm not interested in that vehicle. And therefore, if I'm going to buy a new car, I would just buy it now. But if it's a little bit smaller, but still has all the stuff, I would reconsider a little bit. So I think only with 100% certainty what's going on here will be clear when Tesla actually releases it. And then we will see, is it just a stripped down Model Y, or is it actually a car that looks like a Model Y, but it's not a Model Y? Before, we had rumors, supposedly from Tesla. This is a while now, like last year, that this new model would be called Tesla Q, and that Tesla had this whole Giga Press. So I got a lot of questions about this whole thing. And before, we even had pretty credible leaks, but this is from a long time ago now, that Tesla was planning to produce about 4 million of these smaller vehicles. And it went as far as Tesla contacting suppliers, and that's how we heard about it. We heard about this whole thing from suppliers because they actually basically had Tesla telling them, prepare to make this many parts for this vehicle. Now, Gary Black is of the opinion that it is going to be just a stripped down Model Y at a lower price point. And he thinks this was the biggest negative from the earnings call. He says a lower price trim within the Model Y family will earn Tesla no incremental volume, as any volume earned by cutting costs and price will simply cannibalize higher price trims. This is marketing 101, but I'm not sure anyone in senior management gets this. Jeff, however, believes that there are countless examples in product history of creating larger and smaller form factors to grow total platform scale and increase capex leverage. 5 to 10% primary model cannibalization for 20 to 30% total platform growth are commonly executed all the time. Model Y is a smash hit, shrinking and growing that wheelbase and form makes a lot of sense. Now, Gary Black points out something here, and I have noticed how often the Tesla safety passengers in Robotaxis, they often like to put their hand in a certain place, their right hand specifically. And Gary Black says that's because they are armed with a kill switch on the door if Robotaxi was to get into trouble. Overall, currently though, Gary Black is more of a bear than a bull. And then Tesla regulatory credit sales certainly are not going away completely, but 2024 was the peak. I think James is right here. Oh, and then finally, NHTSA actually released all of the footage of these test crashes of Cybertrucks, and the results are very good. The NHTSA gave the Cybertruck a 5-star rating as it scored the lowest overall probability of injury and lowest chance of rollovers, 12.4% rollover risk, of any pickup truck tested by the NHTSA. In other interesting news, Jeff Bezos is considering buying CNBC. And then Dave Lee just released a video in which he says that in Austin, before the year ends, he thinks he will be able to drive his Tesla and basically have unsupervised FSD in some areas on Austin in his Tesla. He says maybe he doesn't think he will be able to just sit in the back of the car and sleep. He thinks he will probably be still required to sit in the driver's seat, but he thinks it would be basically unsupervised FSD in certain areas of Austin before the year ends. Overall, today, as I'm recording, is definitely a good day for Tesla stock, and I believe that Tesla stock is going to $1,000 per share, and then after that, well above it. After the earnings call, in the long term, I am certainly more bullish than before. In the short term, no. But in the long term, I certainly am, and to me, that's all that matters. My name is Matt Hosius. Make sure to like and subscribe if you haven't yet. And also, I post all my videos on Rumble, so go there if you haven't yet. If you use Rumble from time to time, you may also find my videos over there. There's going to be a link down below in the pinned comment if you'd like to just go to Rumble and follow me there. Thank you so much for watching, and I will see you probably again on Monday.